there's a B point right there, and these right here. In order to get back to the B points, this trend line is gonna have to break. We're at like a 261 and a 161. Yeah, the plan ultimately is still to get on top of the range that we dumped off of yesterday. That red zone makes it seem like it means business, and ultimately I see us getting on top of it. But a couple sideways days along the journey, I call them buffer days because they buffer a lot of people out that don't know what plan they're on. This journey is still very much underway. That's the way I see it. And the institutions will have all these days where there's all these reasons to be worried about it, like the reports and stuff. Watch how they deal with the reports. Watch how they deal with these reports. They make it difficult for people that don't understand they should be holding long to continue holding long, and people that don't have the long. They'll make it difficult for them to catch it. If the trend breaks and people don't chase it by here, then they're in a really good position because it's really easy to pull back and get them out. Like, they can't even handle the 61% retracement, you know what I mean? So if they're chasing to a point where they can't even handle a 61, and they're all too late, a really good play for the institutions. And I think we're going to try and set that up at some point today. Could be with one of these trend breaks. A lot of people will try and chase the break, most likely. It's all part of their game, and they're long heavily. And this drawback doesn't draw back over anything significant that they did to get us here. And I can see that. When we're done dealing with them, then we'll move back onto the plan, and that red zone on top will break. Alright, capital letters into it. That's how serious I am. This is the red zone that will break. It's creating more of a buying opportunity for those that want to grab it. The 261 played out back to the 100, and we have to consider now the 61% retracement. All analysis done from today, it could highlight the red zone. Sideways up and down is a bullish pattern as I see it. The downwards move can be the biggest part though, and that's what gets a lot of people because they don't understand. So when they see the big downwards move, they think it's bearish. All those people are being absolutely annihilated right now. People that saw that it was down in the morning and shorted it because it was down and somebody told them it was bearish. That is crazy. By the way, the report's at 10 o'clock. That's why I say all this stuff. It's not a good time to be sitting there trying to freaking actively bang trades out left, right, and center. If you're doing that, you have no awareness of the 10 o'clock report. Make sure it's protected. This is defensive play right here. It's not an aggressive moment. If you're long from underneath that yellow line, then you want to make sure you have enough profit to be able to endure any kind of big movements that happens. That's why you have to consider taking off as much as you need to be paid. It's failing a short-term head and shoulders upwards. Now, you want to know what's funny? Is people will only be able to look at yesterday and look at today and say, hey, I can see that it wants to do all these things that yesterday's doing. They don't recognize that it wants to go through the red zone all the way up here. They don't recognize this because it didn't do that yesterday. I plan on yesterday forming exactly the way that it did, and then us getting through the freaking red zone. So, at the end of the day, it's nothing if you're still holding. Look at how freaking easy it was for anybody that wanted it. It was exactly the same. It was a gimme from the morning. We went sideways, we went up, we went down, and we returned back to the middle. And if I just drag this over, it's not exactly the same, but is it ever similar? This is the report. Everything will be brought back up to the point that it started and then get through it just like that. Yo, report's releasing right now. It's kind of like a 61. Yeah, just a crappy little Michigan sentiment report where they call 500 mannequins. Here we are through the point of the report. Anybody that got suckered out on the move on the bottom is just that. They got suckered out of it. And all it was a retest of the trend that we broke in the name of continuing beyond it. Oh yeah. And if people can't see, the number one thing is this is the red zone that we will break to the upside in capital letters. That is the way. If the trend breaks and people don't chase it by here, then they're in a really good position because it's really easy to pull back and get them out. Profit taking on the long trade and just let it rip. Everything that we do is going to come back down to the red zone from above.